Thank you, Mr. Chairman. Thank the panel for your being with us this morning. On Mrs. Mahoney's comments about Graham Leach and the impact on banks, having run a community bank for the entire history of Graham Leach's existence, I do think it was flexible in the standards when it comes to examination and practice, both in scope of business and not. So I think that's something that's worked well in the financial services industry. One question I have I'd like the panel to react to is what role does liability insurance coverage play here when you think about standards? I know in our company we took out the coverage at the very modest premium for notification coverage, which was sort of what was recommended by the underwriters. I didn't find it very compelling or particularly useful, but in a large breach it certainly would be helpful to pay the out-of-pocket expenses. But what's happening in the liability arena on insurance coverages for our entities beyond that? I mean, what standard are they setting when they come to underwrite a retailer? Let's start with you, Mr. Dodge, about data breach, because there's obviously a mathematical loss potential for one of your members.
Sure. I'll acknowledge at the outset that I don't claim to be an expert on cybersecurity liability insurance. However, my exposure to it offers me a little bit of perspective. First is it's a pretty immature market, pretty new, and it's rapidly evolving, and I know the administration has ways to make that a more mature, more competitive market. Many retailers are looking into, many have purchased liability insurance as it relates to cybersecurity. I don't have a number for that, but I suspect that number is growing by the day. And when I've heard, one of the challenges that they all face is where exactly to price it. They don't know how much to get, and they don't know if they're getting a great value for it, but they know that it's important to have, and they're working on making sure that that improves over time. But I think your points are good ones. Sure.
Also in the Verizon report that's been mentioned, only about 20% of those breaches are as a result of the retail and the banking industry, which means 80% aren't. And we haven't heard one question about that today. Just last week, I got a letter from the Arkansas Medical Society where over 60 physicians had their identities stolen when they filed their income tax return. They didn't know it until they went to hit send electronically to the IRS, and they were suddenly learned they'd already filed their return, which of course they haven't. So can you reflect on standards that we've talked about today for that other 80% that we have not, that's not represented here today? Or maybe Mr. Oxman and Mr. Orfer, you might take that one.
Thank you, Congressman Hill. And I do think that is an important issue because the harm that consumers suffer from identity theft can in some circumstances be as impactful as the harm suffered from the theft of financial data. And I think H.R. 2205 does a good job of making sure that all entities, not just retailers and financial institutions and payments companies, but all entities that have storage or access to sensitive personal information are required to abide by the federal standards that H.R. 2205 would put in place. And I do think that's a very important component of the bill.
Anybody else want to add on that?
Well, I think the fundamentals of the PCI standard are applicable across all vertical markets. I also share your concern in my discussions with law enforcement that the healthcare systems in particular will be the next big target. Protecting that data and following adherence to the PCI standard would benefit those industries as well.
I think it's a little, odd that HIPAA, we can't even have a conversation about our aunt's health with a doctor without everybody jumping through hoops, but we've obviously got health care data at risk. It's financial data, and this IRS situation is financial loss. I mean, I think this is a serious matter, certainly as serious as having your one's credit card number compromised. So I'm glad to hear you say that you have some comfort that the standards in this bill will help in this other 80% of the issue that we're not addressing today. Thank you. Mr. Dodge.
I would say, we also endorse a strong reasonableness standard, one that provides businesses with strong expectations of what government considers to be a reasonable standard. We believe that it should be enforced by the FTC. and we've endorsed the legislation that came out of the Energy and Commerce Committee to do just that. We think it's important as we're addressing this issue that we first look at the regulatory landscape as it is today and design solutions that fit within that rather than moving a regulation design for one industry, in this case the financial services industry, to apply to the entire rest of the economy.
Right. Thank you for that comment. I yield back. Thank you.
Thank you, gentlemen.